What's up, traders? In today's video, I'm going to share with you how to build a profitable trading strategy. This is something I know you're interested in, so put your phone away, get off TikTok, and focus in. Let's go. Welcome back to the channel, everybody. For those of you that are new, my name is Austin Silver. I'm the co-owner and head of trading here at ASFX. I appreciate you being here for today's video. I hope that by the end of this video, you guys will understand what goes into building a profitable trading strategy. And I want to take a two-pronged approach at this. First, I want to talk about pattern identification, and then I want to talk to you about backtesting. Now, this video is going to just skim the surface of what goes into building a profitable strategy because there's a lot of pieces to it. We're going to be talking about all of those pieces coming up on next week's free webinar. So I'm going to put a link in the description. You can go to asfx.biz/build, B-U-I-L-D. Go there, sign up for free, and if you miss it live or you're watching this after, still go to the link. We'll send you a recording, or a recording will be there for you to still get this information. But like I said, I want to skim this with you today. We're going to just scratch the surface to get you thinking, am I trading with a profitable strategy? Because I think a lot of you guys get into the market with no direction, with no rules, on the opposite spectrum of what systematic trading looks like. And where I have found success, and where many other traders before me have found success, is in a systematic rule-based approach. So the first piece to getting to that is pattern identification. So what I'd like to show you as we go through is two different backtesting spreadsheets. The one that Jerome and I use here at ASFX, we sell that in the backtesting course. And I also want to show you one that one of our top traders in ASFX uses. His name is Tom. Some of you guys know him as the Kaizen trader. But before we get into the backtesting, you're probably saying, well, what do we backtest? So what we've done at ASFX is use pattern recognition to identify patterns in the market, using technical indicators to clearly define those patterns, and then we've backtested those patterns through previous market data to see how well they performed. Now, of course, this is very separate from actually executing the strategy to its full potential. You could have a 99% win rate strategy, but if you can't execute it well, you're not going to see the same result. Taking that a step deeper, you could have a 99% win rate strategy or idea, but if your risk reward isn't good, maybe you're risking 10 and you're only making 2, you're not going to be profitable long term. So what we need to do is first identify the patterns, then go and backtest them. When we look for pattern identification, we focus on technical indicators because they help us identify trend and they help us build parameters, rules that we can then go and back test. For example, if we're using EMAs, we could test a strategy, something that I'm going to talk to you guys about on that webinar, is a strategy of just a simple EMA break. If that EMA break has a couple other questions that we can ask using indicators, we've now gone from a very simple question of, let's call it an 8 EMA break, to now, okay, yes, it broke the 8 EMA, but what's the TDI telling us to do? What are the EMAs telling us to do? What is average daily range telling us to do? Those are other indicators that we use at ASFX that could help you qualify higher probability trades. And therefore, if we can use those rules to backtest and find those higher probability trades, we put ourselves in the best position for success, which is what we're trying to do. So now I think that's a pretty good intro into pattern recognition. Again, a lot more is going to be covered on the webinar, so make sure you guys go sign up for that. It's in the description, asfx.biz/build. But now I want to show you some back testing, what these spreadsheets look like. The first sheet that we're going to look at is this sheet right here. This is Jerome's spreadsheet. He built this, and we sell this in our Backtesting 101 course, so you can use this spreadsheet as well. This spreadsheet takes data from his chart markups and brings math to life so that we can understand what the profitability of that strategy is. So let's, for example, say you're testing bullish flag breakouts off the 21 EMA when everything is in trend on a TDI, average daily range. You have all your questions, everything looks good. You can take all of those questions, put them into the checklist, take all of your markups of your trades that fit that pattern, answer each question, therefore determining the higher probability versus the lower probability, and then this spreadsheet spits out the data that tells us how profitable we have been in the past to therefore hopefully be so profitable in the future. As you can see, like here for Jerome's example, his best performing month was January, up 10%, February, up 7%. So you can take not only trades that you take and get the data, but you should be taking data from trades that you're not even involved in. When we go and backtest, there's way more trades that present for our system than trades we actually take. So when you do this, you want to make sure you're gathering all the data, not just the trades that you take. The winners, the losers, the break-evens, anytime the signal present, anytime the rules are met, You have to be backtesting that and gathering that chart markup as a piece of data. Now, I want to show you Tom's spreadsheet as well. I'm actually using Tom's spreadsheet to backtest a new strategy that we're working on called the A2. Tom is a member of the Black Shirt Club, our private group coaching thing. So Tom and I work together every day, and that's why he and I have been using this spreadsheet. But what you can see is we put in the date, the time of the trade, the pair, what direction, the entry signal, the time frame, max risk reward, if it was a win or a loss, and then the spreadsheet, even just simply right here, calculates the expectancy of this strategy. Now, I've only got 40 markups in this spreadsheet right now, and it's looking very promising. As you can see, not many losses over here. I have about 260 more to put into this spreadsheet before I'm ready to say exactly how we need to trade this, because I'll use this spreadsheet with the questions over here. These questions get graded. Is the L50, which is a part of the TDI, perfectly biased from the start of the day? Is it? Yes. Okay, that gets a 1. Is it a no? That gets a 0. And then the highest score trades, those trades are the highest probability ones. Then we come in and we tweak the questions. Should we add questions? Should we take questions away to try to get to the highest probability entry within the strategy, within the idea? You can even take this a step further, and you can figure out the days of the week that most winners and losers present. You can even figure out here which pairs or which assets. We've got Bitcoin and the indices at the bottom. You can find out which assets perform the best. There's a lot of data that you can gather. Even beyond that, you can simply have a nice little printout here. This is Tom's spreadsheet. This is Jerome's way of showing it. The same kind of idea. It shows total percent gain, how many wins, how many trades, win percentage, average win, average loss, risk reward ratio, profit factor. Simple stuff. Jerome's spreadsheet shows the same thing right here. His counts pips, his shows your equity balance. It's a little bit different, but the general idea is in order to build a profitable trading strategy, you need to identify a pattern, you need to gather markups, you need to backtest the pattern, and if the backtesting is profitable, then you can potentially look to go trade it in the market. I add one more step in there, and I would say after you've come to a conclusion of maybe 200 markups and you know the profitability, say it's like Jerome's right here, 79% win rate, 22% gain over X amount of markups here. Once you have that, I wouldn't just jump in and start trading it. Start small, and then come back to the markups and the backtesting and tweak it. See what questions you could add or take away to potentially make it more profitable. So that's a short, sweet little video for you guys. Hopefully it gives you some context to how to build a profitable trading strategy. Just a two-focused approach. Find the chart pattern, if I could talk, find the chart pattern, backtest it, get the chart markups and backtest it, and then tweak it from there. It's very simple. Now this, again, was a surface level of doing this. If you want to see the new strategy that I'm working on, if you want to see the new strategy Jerome is working on, make sure you go to asfx.biz/build for building a profitable trading strategy. That's where you can sign up for the free webinar. Link is in the description. If you're watching on your TV, pull your phone out. You're allowed to have it out now, and go sign up for the webinar. I appreciate you guys as always. If you enjoyed today's video, please make sure you subscribe. I appreciate that very much. Give it a thumbs up, drop a comment, and I will see you guys in the next one.